मार्केट्स एक्सेट्रा, हम बात करते हैं ग्लोबल ट्रेंड्स के बारे में। और आज के इस एपिसोड में हम बात करेंगे रॉस मैक्सवेल, ग्लोबल स्ट्रेटजी ऑपरेशंस एट वीटी मार्केट से, जो हमें एक इंटरनेशनल पर्सपेक्टिव देंगे इंडिया के बारे में, इंडियन इकोनॉमी के बारे में, इंडियन मार्केट्स के बारे में और गोल्ड स्ट्रेटजी के बारे में। हाय रॉस, हाउ आर यू डूइंग टुडे?
Very well, thank you, Shriti. Very nice to be here. Thank you for having me.
Ross, we are going to talk about gold and silver rates today. Gold, again, is a very important asset class especially for Indians, and wedding season is just around the corner. But we did see gold touching a record high sometime during October, and then prices have fallen. So, does that mean that some kind of consolidation is happening, or do you think that by the end of this year, gold will again touch record highs?
Yeah, so obviously the recent fall or correction has happened through to sort of like global issues. I think the main catalyst for the recent correction started with the sort of easing of tensions between the US and China in terms of their trade wars and stuff like that. That was one of the catalysts that sort of corrected gold initially. I think we're heading into a period where we're going to see higher volatility in gold, and that could be both ways. We've had the US government shut down. So we're going to now start seeing, now that that's finished, we're going to start seeing data released into the market. So I think we're going to see that volatility. I think ultimately the correction is much more of a healthy correction in terms of profit taking. I don't think it's like an overall structural shift fundamentally in the fundamentals of driving the gold prices. So I think, as long as that macroeconomic backdrop remains the same, then yes, definitely we could still see higher pricing in the coming weeks, going into the end of 2025.
Right. And gold is primarily a safe haven asset. So there's just too many things going around the world right now, wars, and then we have, Trump's tariffs, geopolitical scenes. There are a lot of central banks who are easing policies. So in the coming year, how do you see these things impacting gold prices?
Yeah, so I think 2025 itself has been almost, as you say, a bit of a perfect storm for gold and silver prices. We've had those geopolitical tensions that you mean, the conflicts. You've seen central banks buying. You had even like the debt issues with the One Big Beautiful Bill and stuff like that in America. So I think all of this sort of stuff has driven almost like in a perfect storm. And some of those things have eased going into going forward, but I think ultimately, like a lot of those issues still remain the same. We've seen the Fed have moved away a little bit, although inflation in the US seems to still be a concern. I think they've moved away a little bit from that in their commentary, hoping that maybe the inflationary pressures from the tariffs haven't materialized as impactfully as they may have feared. And now that those tariff wars seem to be dissipating a little bit, they're focusing a lot more on the labor market. So I think that could therefore that's going to be the main focus. And obviously that Trump is also trying to push for a weaker dollar, which will again support gold prices going forward, and silver, with industrial demand increasing and the supply constraints there still as well, especially sort of from China with like EV, solar and stuff like that. I think both of them still have structurally upside for going forward.
Right. Ross, you spoke about the Fed, and you also spoke about a weaker dollar. Now, I've been speaking with strategists all over the world who have been predicting a weaker dollar for the last, I think, 7-8 years. That actually never happened. So what's your take on the Fed? Will they, do you forecast a Fed rate cut in December again?
I think a lot. I mean, again, it's a very tricky one to call, and the Fed have been faced with a really tough challenge in 2025. Very, very difficult situations instead of like this potential stagflationary environment. And although we have seen some elements of strength in the US dollar in recent weeks, actually over 2025 we have seen a weaker. The US dollar has become a lot weaker from very high, from a very strong point. We have seen some weakness, and I think again, Donald Trump politically is putting pressure on the Fed because he wants that weaker dollar, because it supports his America First agenda. It supports his US exports, and also turns US companies inwards to look for US products. But I think I think at the moment, I think it would lean towards going for further rate cuts from the Fed. Whether that comes in December, I think it depends on how this sort of initial set of data comes out. Now the government shutdown is over, we start seeing that data into the thing, because Chairman Powell said at the last one, the next rate decision will be led by data. The shutdown has happened now, so the shutdown has ended now, so they will start to receive that data to be able to make that next decision. So I think that's going to be the key. The key point is what this data looks like. If it shows that inflation is not an issue, or not as much of an issue, and labour data comes in weak, then yes, I would expect to see a further rate cut. If not, then it may wait until sort of like the early part of 2026.
Interestingly, not only payroll data, but also unemployment rate. It looks like it's going to go up, and that could also be a concern for the Fed in the coming months, because unemployment rate, wage growth is something that most Americans, struggle with. And with, sure, go ahead.
Yeah, I mean, I was just going to say, Trump ran on that effectively, the pressure that was coming into the general American was feeling the pinch and feeling those issues. So,
Absolutely.
Those are going to be key for Donald Trump as well. And again, to try and stimulate those sorts of things, it's going to lead further to the Fed leaning towards those rate cuts, I think.
Right. Ross, coming back to India, we have our wedding season right now, November to January, and we usually see a lot of demand for gold buying during this time, because brides, extensively use gold jewelry. What is your take on that? I mean, do you see a growth in demand rising in the next few months, and that's proportional to price, right? So do you see an uptick in price?
Yes, I think like obviously we are heading into that demand, like a higher demand season, especially locally in India. Obviously Indian prices at the moment as well are also affected because of the weaker rupee, so it makes it more expensive as well. So that's sort of this sort of double-edged sword, and obviously the correction offers people looking to buy into the wedding season an opportunity to buy on the dips. I think, again, going back to that, structurally, the overall picture hasn't really changed. So I think, buy on the dip strategy still remains a really good way and a good strategy to get into gold. Again, with the higher volatility, unless something structurally changed, dollar cost averaging strategies can help. But obviously, if you're buying physical stuff, then I think it still offers a good opportunity. But yeah, I think, again, I think at the moment, because of the geopolitical stuff, it's a lot of the macro global stuff that is driving gold price, and that will continue to be the main driver of gold and silver prices, but gold especially. So I think, it offers a good opportunity, and as long as structurally, again, like I say, those data releases and the geopolitical and the macroeconomic structure globally remains the same, the demand will continue to push it higher. So I think, this correction probably offers a good opportunity from a buy the dip strategy for people looking to buy into the wedding season.
Right. And what would be your gold and silver forecast for 2026?
So I think, again, looking at it, I think all the time we remain above sort of $3,900 in gold, which I think is around about 100k in local prices. I think we can push up. I think it's going to be more moderate in gold to silver. I think we can see sort of moderate upside, like up to sort of like, maybe 4,800, maybe 5,000. I don't think we're going to see the same gains that we've seen in 2025. Again, going back to what we said earlier on, it was a perfect storm in 2025. But I think as long as the everything remains constant as it is at the moment, certainly in the early part of 2026, we can push on towards that sort of like 4,800 to 5,000 in the spot market, which is around sort of 124 125, 130,000 in local prices. Silver, I think, it's going to be a lot more volatile. It's going to be a lot more susceptible to those to the industrial demand and how, especially coming out of China, that industrial demand increases. And again, I think structurally all the time we remain above that sort of $46 mark, which is around 130,000, I believe. I think there's potentially a lot of upside to sort of like above $65 on the spot price.
Right. Ross, you spoke about the dollar and a weaker rupee. Let me just throw this question because the talk of de-dollarization is, going on, especially in the BRICS area. And we have seen rupee weakening for a long time now. And not only rupee, most emerging market currencies are weakening. And that has nothing to do with the emerging market currencies, but the strengthening of dollar. So, what is your take on this? Because Donald Trump clearly said that, any kind of that kind of stock and, you will be bombarded with tariffs, etc. So what's your take on that?
Yeah, I mean, look, I think from an Indian point of view, the government have come in and they have said that they will do anything they need to support the rupee, and they have, they showed that in October with sort of selling US dollar across thing. But it doesn't solve the whole issue because India is a very import heavy economy, so they have to buy dollars. Companies have to buy dollars. I think going forward, it is a battle that they're going to have to come. But I expect to see a weaker US dollar in 2026 going forward. So I think that will help, especially with sort of government interventions across emerging markets. I think that will help sort of just offset some of those things. So I think we'll see the weaker dollar, and that will help the rupee as well. And obviously going like the India has struggled a little bit in 2025 with sort of foreign investment coming out of the market a little bit. But I think just to sort of like, because it was maybe a little bit overvalued to some of its peers. But I think now that it's sort of reset a little bit, you could see some sort of like foreign investment go back into it, which could also help.
Right. And for Indian market, the stock market, before I let you go, I have to ask you that do you foresee a correction in the market happening in 2026, or do you think it's going to just go up? And a follow-up question to that, we spoke about war and tariffs and the de-dollarization, and there's this geopolitical crisis happening. So do you expect a global recession in the next 2 years?
Yeah, look, I think we're still in a very, very challenging, tricky situation for global banks, like central banks globally. They're faced with a very tight, they're walking a tightrope to try and, stimulate growth, but sort of still counter those inflationary issues. So it's going to be very difficult for them to avoid a recession, I think, over coming years. But equally, I think they are. I wouldn't sort of like guarantee that there's going to be a recession. I don't think it's inevitable that there will be. I think there is still room for them to manoeuvre to support that. And I think the fact that inflation is starting to just become less of an issue, although it's still there, I think that helps. In terms of India, we have seen a correction a little bit in Indian markets this year. I think that. India itself is still very well placed. Like macroeconomically, it's still very, very sort of strong. So I think that can help it. And I think a lot will depend on, unfortunately, like global factors rather than Indian factors, like domestic factors. I think as I said, potentially we are starting to see foreign investment come back into India. It can become more attractive. And that if that remains the case, because it's still so strong domestically, I think that it could be shielded a little bit from any decent deeper correction.
Right. I think we covered the world. I think we covered most of the topics. Only bonds and crypto is something that is left. But thank you so much for your input. It was very interesting and great insights. Thank you so much for joining us today, and hope we speak soon.
Thank you very much, Shriti, for having me. Really enjoyed it. It's been a pleasure.
you.